Good morning, everybody. It's Friday, February 2nd. It is 5:29 a.m. Central Time. Grain markets mixed to higher this morning. Brian Splitt is joining us today. Guys, let's start off with this importing story. We're importing soybeans into the United States.
We sure are. American buyers are taking advantage of cheap Brazilian soybeans. American chicken producer Purdue Farms has purchased 3 cargoes of Brazilian oilseed. If delivered, the shipments will be the first Brazilian soybean imports during this time of year since 2019. American buyers typically rely on domestic purchases in the winter months as inventories are high after harvest. The shipments signal that Brazil's crop is better than expected. Compared to Chicago futures, Brazilian soybeans are selling at a discount of more than $1 per bushel.
Okay, I have 2 things here. First off, we do import soybeans every year. It happens every year. It's going to be a little more substantial this year than it typically would be. And then this chart from Bloomberg, I think this is at the crux of the problem for the soybean market. This is our big problem, is that Brazilian beans on the export market are $1.50 per bushel cheaper than what we can offer out of the U.S. So the imports, that's not necessarily surprising or shocking, but this chart and this statistic, Brian, is this is our problem, I think.
It really is. You just have such a steep discount right now, and we do typically import soybeans into the East Coast. This is a lot earlier than we typically would. Usually it would start hitting maybe in the April-May timeframe, but we already have a large estimate from the USDA of imports at 30 million bushels. If you go back several years, somewhere between 15 to 20, maybe 25 on the upper end. So the 30 million bushel import number is a large number that we haven't seen for quite some time. And, you go back, it would be the largest since shortly after the drought of 2012.
Yeah. So, of course, following the drought, we imported some beans for a couple of years in more substantial quantities. So this is not the fact that we're importing beans is not shocking. The thing that is not shocking, we've known this for a while, is that U.S. beans are just overpriced by a substantial margin. And it's very much problematic. And I think this is why the bean market's had a tough time hanging on to any sort of rally.
Yesterday, Corteva stock surged 27%, its biggest one-day jump on record, before giving back a portion of those gains. Shares ended the day with an 8.6% increase to close at 54.06. The increase was attributed to the company's expectation that continued demand from farmers will increase profitability over the next 2 years. According to Corteva, increased demand for crops and biofuels will boost profits. Growth in the crop protection sector will also lead to higher profits. Corteva's stock fell almost 20% last year due to delayed farmer purchases and competition for generic pesticides in Brazil. Corteva became a publicly traded company in 2019. Pioneer Seed is a major part of the business.
I can predict some of the comments. These damn seed companies are making a lot of money and we're not. And, this sucks. Look at this chart, though. I threw this together. The Corteva stock is very highly correlated to corn, the way that it looks. I mean, yeah, they had a big one-day bump on this report. But generally speaking, it kind of moves around with the price of corn, I guess.
Yeah, a lot of these agricultural niche companies do. The stock performs well when the price of the futures are high and vice versa. I do think that in general, a lot of the agricultural-based companies will do very well. Ones that handle grain will do very well. With the amount of carry that's in the market, if you're handling grain and utilizing that carry, you're going to be able to make very good profits by being short and continuing to roll into a carry market. But it's one of those things where you're going to have anytime the market is down and it feels icky like this, and then you hear other parts of the industry expected to make money, it just kind of rubs you the wrong way. But as you can see, the correlation is pretty high.
Corteva is a big boy company. They're run by smart people. These big companies, they're big for a reason. They're very good at business. They're good at making money. They're good at managing margins. And that is apparently what they've done, as unpopular as maybe this might be. And there's probably a lot of farmers watching who are like Pioneer dealers and that sort of thing. I mean, there's a lot of people who are involved in this, but yeah, they're making money and corn prices suck. I guess that's the deal.
Estimates for Brazil's soybean crop continue to decline. According to StoneX, this season's Brazilian soybean crop will reach 150.4 million tons. The estimate is 1.6% lower than the firm's January projection and 4.8% lower than last year's record crop. Poor growing conditions were cited as the reason for the cut. StoneX also reduced the Brazilian soybean export forecast to 93 million tons, down from 95 million tons. The firm is estimating total corn production this season at 124.5 million tons, unchanged from last month.
So they're pretty much with the bean number, they're kind of where everybody else is at, I guess, right?
Yeah, right around 150. And that's part of, we're going to get another USDA report in February. And
they'll come down again.
They'll come down, but probably not to where a lot of the privates are. We saw that with the Argentine soybean production last year, where the privates just did come down much faster than USDA and CONAB. And eventually the government agencies caught up. I wouldn't be surprised when all is said and done if that number settles below 150. I think the crop conditions that we had and the growing conditions for the first several months of the growing season were such that a lot of that crop is going to have a very hard time coming back. We'll see, as we progress further through the soybean harvest here. But being sub 150, I don't think would be a surprise to me. But I just don't think the USDA and CONAB are going to come down as fast as everybody else would like to see them.
So the early yield reports out of Brazil have not been that great, but those should probably be the worst, right?
Yeah. Early planted stuff. That was sitting in hot and dry conditions for months. So those early planted beans are going to be the worst of it. And then the replants and then the later planted crop definitely dealt with much better conditions, as we did see some rain come in as we turned the calendar from 23 to 24.
Running through some South American weather here. Brazil is going to be fairly wet for another 5 days to 10 days. Especially in some of those northern and central areas. Southern Brazil, a little dry, but I don't think the trade is concerned about Brazilian weather right now. The concern had been Argentina, and Argentina is still going to be hot and dry for 5-6 days the way that it looks. But then the extended stuff, like the back half of this 10-day forecast, looks fairly convincing in that rains return, and you're going to need more beyond that, but it looks a little bit better. I think this rain in the forecast for Argentina in that 5 to 10 day period may also have something to do with the weakness in the soybean market that we saw yesterday.
U.S. soybean export sales declined significantly last week. Net soybean sales of 6 million bushels fell below pre-report estimates and also set a marketing year low. The print was down 71% from the previous week and down 64% from the prior 4-week average. China was the largest soybean buyer for the week. Net corn sales of 48 million bushels were up 26% from the previous week and up 58% from the prior 4-week average. Japan was the largest buyer for the week. Net wheat sales were reported at 12 million bushels, down 29% from the previous week and down 9% from the prior 4-week average. The Philippines were the largest wheat buyer for the week.
I'll venture to say the soybean number was like shockingly bad, but it goes back to our first story. We're overpriced.
Yeah, and that number is terribly low. We had Mexico buy more than that in just a 1-day purchase yesterday. So that soybean export number is abysmal. Corn, that's a good number. You get over 1 million tons in a week, and I like that Japan was the largest buyer. Japan was absent for a very long time, and we saw really Mexico being the main buyer. So I like the fact that we're seeing the Asian market open up for U.S. corn. And one of the things that isn't on here, but as bad as the soybean sales were, the soy meal sales were about that good. So we had, I think, the second best weekly exports for soy meal in over a year. And so hopefully, we can get some demand for the product if we're not getting demand for the soybeans themselves.
A lot of people do what we'd call like pace analysis when it comes to export sales versus, what USDA projects. And it's actually really difficult to do because Brazil has become just over the course of the last, even 5 years, they've become such a larger player in the export market. As it relates to corn, China just started buying Brazilian corn like last year. So a lot of people made the argument that maybe the export window for the United States as it relates to corn, maybe more so than beans, is going to be shorter than maybe it would have been like 5 or 10 years ago. So it's kind of tricky to say like USDA's got to go one way or the other with these numbers. I think the soybean number that USDA has out, given this week and in the last few weeks is maybe a little bit too high. So I don't know. I don't have anything really great to say about exports.
So as Brian just stated, we did have a flash sale of soybeans yesterday. U.S. exporters sold 206,834 metric tons of soybeans to Mexico for delivery during the current marketing year. This is the second USDA flash sale of soybeans since the beginning of the year, totaling 503,834 metric tons.
So this stuff all moves via rail, I imagine. There's no Panama Canal involved, none of that. So it probably makes sense for Mexico.
Yeah, and it's just you think back over the last 5, 6, 7 months, how integral Mexico has been for our domestic export program. I mean that Mexico has shown up for corn and soybeans over and over and over.
Happy to have them.
USDA released weekly drought monitor data yesterday. Temperatures across the Corn Belt, the majority of the Corn Belt, were warmer than normal last week. A large portion of the area received above normal precipitation. Drought conditions improved throughout the vast majority of Indiana, Missouri, and Kentucky. Improvements were also noted in central Iowa, southern Illinois, and northwest Ohio. The High Plains also saw above normal temperatures this past week. Drought conditions across the area were mostly unchanged. When we look at the percentage of U.S. areas experiencing drought, corn country, 28%, soybeans, 29%, winter wheat, 17%, spring wheat, 28%, and cattle country, 18%.
Brian, are you still hearing a lot of concern from farmers regarding drought?
Really only in Iowa, and it's evident by that map.
Yeah.
Why. And it'll be really interesting to see as we go over the next 2-3 months how Iowa evolves as we go into the growing season. But that seems to be the main area of concern as far as drought goes.
As far as the markets are concerned, if they were to care about one thing right now, it would be winter wheat. And we've seen a big improvement here. At the end of December, 30% of U.S. winter wheat areas were experiencing drought, and that number's down to 17. So you've seen a lot of drought relief in places like western Kansas, Oklahoma, parts of Nebraska, places like that. So the needle has moved in the right direction in some of these areas, certainly the way that it looks. What did cattle do yesterday?
They headed for the moon. Feeders have climbed to their highest level in more than 3 months. They gained between 312 all the way up to 472. Live cattle were up $1.60 to 247. Box beef basically treaded water yesterday. Choice ended the day at 294.94. That was up 40 cents. And select ended the day at 283.25. That was down 92 cents.
So they like that report, Brian. What does this chart look like to you?
Yeah, I mean, they revised the cattle herd lower, over 400,000 head. The market really took that to heart, and the chart looks really good. The live cattle does not look as good as the feeder cattle. Feeder cattle really punched into new highs. Some of the deferred live cattle contracts did, but the bulls are in control currently. We're hitting retracement levels, but we still have some gaps above the market that are going to be very valid targets, and hopefully we can see this market continue to push.
Outside markets on Friday, guys, U.S. dollars about flat. The stock market acted really well yesterday. We had some strong earnings from Amazon and Facebook, and I think a couple others. Bonds a little bit lower this morning. Crude oil's up 43 cents in the March WTI at 74.25. Have a great weekend, guys. We will talk to you on Monday.